Um, Hello everyone. Good afternoon. Good afternoon. Can you hear me?
Sure.
All right. Thank you, Michelle. Welcome to class, everyone. We are currently about to start, I think, unofficially our last class for the FinTech mentorship and internship program. For the FinTech class, right, in today's class, we'll be discussing intellectual property protection for FinTechs, right? And I'm sure it's going to be an exciting time in class. Please, let's do well to pay attention in session, get ready for presentation, and overall just ask questions and have a good time in class. And overall just have a good time in class. So our mentors will be joining us shortly. While we wait for them, I'll just go ahead quickly and I would introduce the mentors that we'll be expecting in today's session. So first and foremost, we are expecting Mr. George Onyebuchi. I don't think we're any strangers to Mr. George. If I'm not mistaken, he has been around for two sessions, and I'm sure in the course of today's class, well, I'm not totally sure, but we hope that he's able to join us soon enough. All right, so Mr. George is our first mentor. Next, we have Mr. Max Ikombe. Mr. Max Ikombe, one of the first mentors we got to meet, that is in week one. Right, Mr. Max, a very, very intelligent and impactful mentor within the IP and fintech space. Thank you so much, Mr. Max. Okay, we expect him to join in on the call very soon. And last but not least, I think we are expecting a third mentor. All right. So last but not least, our last mentor for today is Mr. Ademola Ayodele. Mr. Ademola Ayodele is a commercial lawyer and legal strategist with a strong focus on corporate transaction, contract strategies, dispute resolutions, and advocacy. He is the principal partner at Ademola Ayodele and Co., a graduate of Obafemi Awolowo University. He works at the intersection of law and emerging energy and financial technologies, advising businesses, founders, and organizations on structuring transaction, managing legal risks, and navigating complex commercial relationships with a keen eye for contractual risks and regulatory dynamics. Ade Damola is particularly interested in how well structured agreements and sound legal strategies can prevent disputes before they arise. His experience spanned contract drafting and negotiation, commercial advisory, and dispute management across multiple sectors, helping clients build legal resilient structure that supports sustainable business growth. Beyond his legal practice, Adedamola is an active voice in professional discourse, regularly sharing insights on corporate governance, commercial law, fintech regulations, energy law, and intellectual property strategy. Through his writing, thought leadership, and mentorship, he is committed to simplifying complex legal issues and contributing to conversations that strengthen business ecosystems and support the next generation of entrepreneurs and professionals across Africa. Thank you so much, Mr. Ade Damola. We hope he is able to join us soon for the session. But all the same, welcome to class, everyone, once again. So just to kickstart the session, we would want to have Mr. Max Ikombe help us run through our introduction for today's class in the next 20 minutes while we wait for our other mentors to join in. So, Mr. Max, thank you so much, sir, for joining. We are happy to have you in the session today. We are discussing intellectual property protection for fintechs. So, sir, please, we want you to just help us do justice to the course or to the subject matter today. You're welcome, Mr. Max.
Yeah, thank you, Dennis. It's a pleasure and, of course, always a privilege to be
at this JIIPCC mentorship session. I thank, of course, the organizers for their consistency in putting this together. And of course, I commend all the mentees who joined. I know it's not easy. It's a public holiday. It's a time everybody wants to rest and relax and enjoy the holidays. So it's a testament to your diligence and your quest for knowledge that you are here this morning. Again, I will start by saying the topic we are looking at today is very important. And let me open by stressing how important intellectual property is to fintech. Why I say that is fintechs are unique because they fall within the bucket of companies that we call startups. And when I mean, of course, some fintechs are not startups, some are already established or set up by already established enterprises, but largely, most fintechs are startups. And why is it important to categorize startups is typically because of funding. We need to always understand that corporate finance is itself quite different from regular finance in the sense that corporate finance can be very formal. So therefore, accessing corporate finance is always not very easy for new enterprises because the formal financial structures have very rigid, rigid requirements. So the typical way, for corporate finance, for funding a company, typically, of course, is to fund through traditional financial institutions. That would include taking loans from the bank. Of course, we all know that if you go to the bank for a loan, typically the first thing the bank wants is security. How are they guaranteed that their money will be paid back? So, of course, all the issues of collateral, balance sheet, and all that begin to come into play. So you can see that within the area of fintechs, this is not exactly easy for them because a fintech startup typically will not have any assets already on ground that it can use as a collateral. Its balance sheet would, of course, be light at that point because it doesn't have buildings, land, equipment, and all of that. So typically, startups, because of the challenge with raising security for financing, typically resort to alternative forms of financing, which include private equity and, of course, venture capital. So you can see that because of that unique funding approach that has to be taken by most fintech startups, intellectual property becomes one of the properties that fintechs can own or easily own and that can be used as the basis or a collateral or security for advancing funding to them. So, I mean, for those in this class who have not done the intellectual property class, I'll just give a brief description. So, intellectual property are essentially creations or inventions of the human intellect or mind that are not physical and tangible, but that have value. So, simple example, we are all joining this session today through a device. So, it therefore means that you either own a phone or a laptop you are using to join this session. So, your phone or your laptop is tangible. It's a tangible property. It has value, but it's tangible. But think about it. There are other things that are not tangible. You cannot hold them, you cannot touch them, but they are equally valuable. So just the way your laptop or your phone can be used to make income, you can use it to run a business and make income as much as you can build a factory. I'm just talking about physical property. You can own a piece of land that is also valuable and you can use it to derive economic benefit. But think about it also. There are other assets, other things you have that are valuable, but they are not tangible, but that are the reasons why you can make income. Simple example, the word Coca-Cola, Coca-Cola. We all know the Coca-Cola company is a valuable, massive company, selling carbonated soft drinks all over the world. But the question is this: what really makes Coca-Cola its money? Is it the factories he has all over the world, the chemical plants and all of that he has? Is that really the value? And why I ask that question is, I'm sure most of us have had some other drink that doesn't taste too bad, that might even taste even better than Coca-Cola. But when you walk into a restaurant and you're asking for a soft drink to go along with your meal, typically you'd likely go for Coca-Cola. Why is that? Because over the years, you can come to trust the brand Coca-Cola that, number one, their products, have a certain standard, a certain quality. I would meet, of course, certain, say, hygiene standards, for instance. So you can see that what really makes Coca-Cola is not necessarily, or what makes money for them is not necessarily the plant and all they have. It is the name, the unique symbols that associate a bottle of soft drink with that company. Just to drive the home point, for those who are Nigerians, you will know, for instance, that for a long time, the company that produces Coca-Cola drinks in Nigeria is not Coca-Cola Company. It used to be a company called Nigerian Bottling Company. They simply were granted the right by Coca-Cola International, based in the US, to be the ones to use the name Coca-Cola to sell soft drinks in Nigeria, of course, subject to the formulation given to them, essentially. So you can see that if that company, Nigerian Bottling Company, is stripped of the right to use the word Coca-Cola, and that right is given to another company, you can see that immediately that Nigerian Bottling Company, with all its plants and all, would not make as much profit as it would make when it sells bottled drinks with the word Coca-Cola or the symbol of Coca-Cola written on it. So it therefore tells you that what the real value of Coca-Cola as a company lies in the name, the right to use that name, the right to use the logo, the right to use the bottle of that drink. That means any company that is given that right to begin to manufacture and sell Coca-Cola products can instantly become a multi-billion-dollar company just by the grant of that right. So you can see that the word Coca-Cola is not tangible. You can't hold it. It's not a factory. It's not trucks. It's not chemical form. It's not the chemicals and all of that raw materials used to produce. It's just a name. But you can see that there's more to that name than just the word alone. That name commands attention in the market. That name would make people buy a product once that name is on the bottle. So you can see that that name is now in law what we call a trademark, or is protected by the law of trademark. So nobody can use that name because Coca-Cola Company has registered a trademark. They are the only ones allowed to use the word Coca-Cola to sell soft drinks. And that right is very valuable. So you can see, therefore, that for a fintech, you might not, at the point you are starting up, have big factories, big equipment, big landed property, and all that to secure an advance of a loan or financial package to the company. But the unique idea, the unique solution that fintech is bringing, for instance, a fintech that is going to cut transaction time by maybe additional 5 seconds. That, I mean, for those of us who are Nigerians, we know how before now bank transfers used to be a game of chance. It used to be something that could be very frustrating. You go to a shop to buy things, you do a transfer, and the shopkeeper is saying, "Look, I've not gotten the alert yet. You can't go with the items until you have, until I've gotten the alert to confirm that the payment has been made." But we all know when OPay came into the market, they created a solution that ensures that payments go instantly. The moment you do a transfer, the recipient is immediately getting an alert. So you can see that is a very valuable technological solution they have brought to a technical problem, which is essentially what we call a patent. So in my speech, I've mentioned a few intellectual property. I've talked about trademark. Now I'm talking about patent. Patent is about technical solutions or inventions, which essentially are technical solutions or that are solutions to technical problems in a particular field of technical of human technology. So payment processing, like I gave the example now, a company that comes and is able to ensure that instant payment happens immediately. That is a valuable invention. Of course, there'll be a set of protocols, technological systems, algorithms, even a transaction flow that is behind that invention that makes instant payment happen. So you can see that for a fintech startup that has that kind of breakthrough idea, even though it doesn't have land and houses, that idea, if it gets a patent on it and controls or has a monopoly right to be the only person to use that idea, that alone is valuable enough to make people advance money to the company, knowing that even if this company goes bankrupt, the fact that we can take their technology, that invention, and sell it, it means that we'll be able to recover whatever loan we have given to the company. So you can see how intellectual property can become the critical collateral, that a fintech needs to actually raise financing. So there are, of course, other kinds of intellectual property. There's also what we call copyright. Copyright is the exclusive right given by law to the creator of the creator of a work to control the use and the exploitation of that work. So let me break that down in simple terms. It simply means that copyright law covers essentially 6 types of work. What we call literary works, that would be any written work, novels, storybooks, and any written work at all, which of course to an extent will also include computer algorithm source code as well. So if you come up with a unique computer source code, then you can get a copyright. It means nobody else can use that source code without your permission. There are, of course, others. There's what we call musical works, which we all know. But just know that musical work is not talking only about the melody that you hear. It's talking about the actual composition of the musical components, but that you perceive when you listen to music. Then we also have another category called sound recording. So sound recording is different from musical works. Sound recording is any sound recorded that can be perceived by the ear, irrespective of its musical quality or value. So even if you use your phone to record the sound of cars passing by your window, even though that is not musical as it were, but that's a sound recording, nobody has the right to take that recording and use them, for instance, in an advert for their company without your permission. We also have what we call artistic works, which are essentially, of course, works that you can sense with your eyes. Include pictures, include drawings, include paintings, include works of sculpture, and all of that. Then we have audiovisual works, which is simply put videos. Then we also have broadcast rights. So those are the 6 type of works that are protected by copyright. It means that if you create any of these 6 works, nobody else can take that work, duplicate it, and sell to members of the public without your permission. So you can see how valuable that can be for a fintech startup, including protecting your algorithm and your source code. But note that there can be some differences. So the technical function your algorithm produces will be protected by patent. But the actual way you express the algorithm in terms of how it is written in source code or in coding language will be protected by copyright. So I've talked about copyright. I talked about trademark, I talked about patent. Then, of course, there are other intellectual property rights. There's what we call industrial designs, which just talks about the look and feel as opposed to the utility or the use of a product. So those features on a product that just enhance the look and feel and make them attractive to people. Also, you can also protect that. So that comes to play in the case of packaging, for instance. So one of the great things that Apple used to gain market share was its packaging. So, I mean, anybody who has bought an iPad, you see how it comes, with the packaging, it looks unique. So all those things were protected by industrial design. So nobody else could use that packaging that looked like an Apple packaging. And because, I mean, if every other person was allowed to do it, they'll be able to deceive customers who wanted to buy Apple products into buying another product, thinking they're buying Apple products. So with all of this, I hope you can see how intellectual property is a valuable tool, a valuable asset base and valuable balance sheet item for any fintech. It can be what any fintech would use as its primary asset to be able to raise funding in the market. So I think I'll stop at this point and we'll hear from the other mentors. And of course, I look forward to your presentations and then the question and answer sessions that will come afterwards. So, Dennis, I hope I kept to my 20-minute time slot. Over and back to you.
Thank you so much, Mr. Max. And yes, you did. Thank you so much for giving us our introduction into the class today and just basically breaking down some of the concepts um, around just intellectual property and how they can be advantageous to fintech and how they can be advantageous to fintechs. We have our second mentor on the call, Mr. Adidamola. Thank you so much, Mr. Adidamola, for joining in. You are welcome in for the session today. Uh, yes, sir. So, please, we would like to find out if in the next 20 minutes, thereabouts, 20, 25 minutes thereabouts, you'll be able to run us through your presentation or what you have prepared for us in the session, sir.
All right, thank you. Sorry, I was a bit late. I don't know. Sorry, can you tell me your name, please, moderator?
Yes, so my name is Dennis Williams. Sorry for not introducing myself.
Okay, Mr. Dennis Williams. Thank you. Thank you, everyone, for having me. I'm Adina Mola. And I'll start by saying, I'll start with a simple question, and I'll try as much as possible to restrict myself and make this conversation within fintech space alone, without trying to deviate and go into other areas. However, I will try as much as possible to comply with the time frame. Let me start with a simple question. If you say you are building something and someone else can copy that similar or the exact thing tomorrow, it has stripped you of your idea. You have to think about it. In today's digital economy, especially in the fintech space, the most valuable thing you are building is not just the product, it's the idea, that concept that you're able to conceive on your own and transform into something tangible, something you can relate with, that everybody can relate with. Now imagine a scenario, for instance, you and your friend, maybe in form of partnership, you develop a very brilliant mobile loan app. You spend a lot of time trying to get it right, trying to refine the algorithm, design the interface, testing the model, and finally it launched. And a lot of people, the market, when I mean the market, I mean users, end users, they embrace it, and it's gaining momentum. And a competitor from nowhere who just feel like, okay, I can imitate and launch a similar product, just release something almost identical and same features, similar design to your own. The real problem is not releasing that thing or imitating you. The real problem is, have you protected anything? Is there trademark? Is there clear ownership? For instance, clear ownership of the code, legal agreements with your workers, your contractors, your developers. At that moment, the question will no longer be who built this or who conceived this idea first. The question becomes who can prove ownership. And that is why we are here today to discuss intellectual property protection of fintech. Thank you. Let me take a step back and properly, try to structure this conversation properly. And I would like to start by trying to discuss or speak on what fintech really is. Fintech really is the short form of financial technology. It's simply the use of technology to deliver financial services. Financial services like payment processing, um, loan services, investments, digital banking, and all form of financial powered softwares. And let me say, we are in a digital or technological world now, in the technological era, where fintech innovation is thriving and at a very fast pace in Africa. From mobile money, for instance, we have Momo, we have OP, like Mr. Max has rightly said earlier, we have OP, we have Money Points and the likes, and they are taking over, taking over the fintech, the financial space, though under strict regulations anyway. But here is what many founders, or some lawyers, let me put it that way, fail to fully appreciate. Fintech is not just about money. It is about idea, the system, and the identity. And all of this falls squarely within the domain of intellectual property. So let me break it down. What is intellectual property? So I think I'm on the fourth slide now. The person sharing here. Thank you. And what is intellectual property? When you talk about intellectual property, like earlier defined or earlier discussed, intellectual property basically is the creation of the mind. When you are saying intellectual property protection, that is when you are trying to make move to protect that creation of the mind, that distinct creation that you have conceived on your own and you have started working on, to make it a reality. They are recognized by law, and protected by the law. In fintech, primarily, IP, intellectual property, transform an abstract system. When we say an idea, it is not something you can touch, or it is in abstract form. It transforms an abstract system into a defensible legal asset, which primarily relies on, let me say, the four pillars of intellectual property: copyrights, trademarks, patents, and trade secrets. And we are going to expatiate and discuss this elaborately now. Are we together, please? Oh, sorry, is muted. Firstly, let me talk about copyright. Copyright protects original work.
Yes, sir, we can hear you.
Hello?
Hello, sir. I said we can hear you. Sorry.
Sorry, let me know if you can hear me now, please.
Yes, sir, we can hear you now, sir.
All right, thank you. Thank you. Like I was saying, copyright protects the original work, like software, mobile application, website content, and certain aspect of UI, UX design. So, what does copyright protect? If you write a code, for instance, the code is automatically protected under copyright the moment it was created. It requires you applying the registration and the likes. Where most people get copyright wrong is that copyright protects the expression and not just the idea. Once it's still in the idea form, there's no protection for it until it has been expressed. You understand? When it has been codified and maybe launched. A lot of people do not have to when we say an idea, a code, for instance now, the code of OP is different from Money Points when you go into it on a deeper level. But when you are talking about your own exact code is what copyright can protect. Now, let me talk about trademark. What is trademark and what does trademark protect? Trademark protects your brand, basically your name, your logo, and slogan. For instance, if you hear everywhere you go, without anyone telling you, we can easily say this is MTN, they are talking about MTN. Or if you should hear rule your world, this slogan pertains to Glow. So trademark protects your branding, that is your name, your logo, and slogan. So when you see a fintech company name that that identity, for instance, is not just branding, it is a legal asset. OPay is a legal asset to that company. MoneyPoint is a legal asset to that company. And any other company that they have trademarked the name, it has become not just an ordinary name, but a legal asset. And your brand is what your customers trust, which is why it has to be protected. For instance, if someone should create a confusing similar name or logo, they can easily divert your user. And that can only be done if it has not been trademarked, if it has not been protected. So these are the importance of intellectual property protection in fintech space. Coupled with the fact that we are dealing in fintech, they deal with numbers, users, and to prevent deception, stolen identity, all assets. What I mean assets now, name, all your code, it has to be protected. Now, let me speak on patent briefly. It's a bit more complex. Mr. Marx tried to explain then, and I appreciate how he tried to break it down and simplify the whole idea of patent. But patent prevents invention, new, non-obvious, and useful solution. But there's a twist to it. A lot of people are or let me just say a lot of jurisdictions, or in Nigeria a bit, let's say they are quite restrictive when it comes to patent software or business method when you try to like register for patent in that regard, because not everything can be registered under patent. I don't know, maybe I'm clear enough, or I should come again and address it better and make it more simpler. In fintech, for instance, when you are saying you want to patent your assets, this could include, your algorithm, how you tweak your system, to work, your innovative system, your technical processes, like Mr. Marx rightly mentioned earlier. You know, all of these things, it has to be strategic for them to be able to approve such patent application, that okay, this is yours, and it's not something that is generic, like okay, it is a normal thing. If you are going to this space, for instance, if you have a special way of of fine-tuning your algorithm to work for your own company in a distinct way that is different from all other companies, then that can be approved. But if it is a general idea that anyone can come by or that is required, that there's a bit restriction on that. Now, trade secrets. What is trade secrets? Earlier, when I was listening, they mentioned Coca-Cola. Yes, that's trade secret. Every company has that secret, that their magic secret that make them who they are. And how do you protect trade secrets? There are a whole lot of ways to guide your trade secrets and to make it particular to you alone, to your firm alone. We have contracts, different contracts. If you have a company, for instance, you have staffs that you're going to employ, and your staffs in the course of operation, couple of trade secrets will be revealed to certain staffs. How do you protect it? There are some clauses you would have included. Maybe let's say, for instance, in the employment contract, there will be non-disclosure agreement and a whole lot of contracts, agreements to protect your interest, to protect that trade secret, that magic secret that makes you you. So that's that about trade secrets in fintech. Now, this is where it gets interesting. What makes fintech particularly unique? It sits in the intersection of three things: technology, finance, and regulation. And that combination creates complexity because you are not just building software, you're handling money, you're handling data, you're handling identity and compliance obligations, which can be a lot of bottleneck, it can be a lot of complicated, it can be a lot of assignments. This means your IP is not just a legal asset. It is also tied to regulatory approvals, licensing, and operational structure. For example, your app, let's say Money Point, it is not just a code. That app is not just a code. It is a part of a regulated financial system, being strictly regulated under CBN, FCCPC, and the likes, NDPA. You know, the database is not just information, it is a sensitive financial data. The algorithm is not just logic, it determines the credit worthiness, how reliable the platform is. So the more you are particular about protecting your interest, your intellectual property in compliance with regulatory framework, the safer it is for the firm. For instance, any fintech firm for the fintech space. Let me put it that way. Now, we are talking about protecting your idea or protecting fintech assets. The assets that majorly that needs to be protected under fintech in the fintech space are your software, your code base, like I mentioned earlier, which is the engine of the product, the algorithm, the models, the way you tweak or the way you fine tune your app, your platform to serve you better, to make it stand out, to make it unique. Your mobile app, the user interface, the brand identity, the name, the logo, and the slogan. Those are the brand identity which you trademark, like I mentioned earlier. The database, the business processes and workflow. These are the tangible assets that you have to protect in the fintech space. This is where it gets interesting. If you as a lawyer cannot clearly identify these assets, you cannot properly protect them. You have to be able to know what will likely expose any firm in the fintech space, which is what's going to make you stand out and which is going to protect the interest, the future, and whatever that company is going to become. Now, the major risks, there are risks to everything. The major risk and why it is important to protect your intellectual property in the fintech space is: one, identity theft. If you come up with something that is unique, that is outstanding, that gives solution, that provides solution and services to the people without you doubting or placing a whole bet, you should know there are a lot of ways out there that are ready to imitate and copy your innovation exactly. But what is going to be the barrier? What's going to be the stopping force for them? That is if your intellectual property is protected, if it is airtight protected. For this to for us to for intellectual property to attain airtight protection, there are a couple of measures you can put in place, like I mentioned earlier: proper documentation, NDA, contract clauses, reliable clauses in every agreement, maybe employer contract, contractual release, and ownership, which is very, very, very important. Ownership. When it comes to ownership, you can employ a developer and pay that developer, and that developer can still claim ownership to the code developed to run your fintech company. So in that regard, you would have made the proper provision in the contract that you will be signing or executing with the developer. If you are engaging a developer, even before you commence anything, there should be an agreement, transfer of ownership of codes. That's going to give you the rights, and it's going to restrain the developer from coming maybe later in the future after the company has scaled to claim ownership. So these are the measures you have to put in place. So when we are talking about the trademark, copyright, patent, trade secrets, then we have the agreements and the likes, the contracts you have to execute. These are what is truly good. These are what that will truly protect your interest. Your intellectual property will be protected if all of these can be put on check. Now, what are the legal frameworks? We have legal frameworks that protect intellectual property. And they exist solely because many people do not use it effectively. We have, quite a number of them, trademark registry, where you trademark, copyright, patent, and beyond protecting your interests. For instance, MoneyPoint is not operating solely in Nigeria. Flutterwave is not operating solely in Nigeria. They operate in other jurisdictions. So apart from protecting those interests or registering those interests in Nigeria alone, you might as well, if you are trying to expand operations across border, you might as well try to protect in that country or explore WIPO, or the Intellectual Property Organization, for broader protection. And you have to be deliberate about what you are protecting. So so what you should do actually, for instance, at the early stage, there are stages to company, to setting up a firm. You have the startup stage, um, um, which is the early stage. We have the growth stage, and the scale stage, when you have already attained um, uh, full operations. At every stage, there must be internal structures and documentation that will help guide you on what to protect at every stage of the company's growth. And as lawyers, you don't just act as lawyers, you come up as strategic advisors. You have to structure IP ownership, draft contracts, advise on regulatory compliance, protect innovation, and if we're positioned, the company will not be able to do without your services. Now, for our key takeaway today, I would say intellectual property is a critical asset in fintech business. Protection must be proactive, not reactive. You must have protect, envisage risk being able to protect it even before it happens. That's what I mean by protection must be proactive and not reactive. Contracts are essential tools, drafting. All clauses must be able to capture and protect the company, must be able to capture the risk and protect the company. Ownership clarity, which prevent disputes, and lawyers are professionals and central to innovation ecosystem. I would like to close and conclude. I would like to conclude by saying the greatest asset in FinTech is not just the funding or setting up the app. It's not the technology. It's the ability to own, to protect, and to control what has been created. If investors are coming in, the first question they will likely ask you is, who owns? Can you prove ownership of this innovation? Because innovation without to protection is just exposure to risk, to theft, to conversion, any kind of thing. It must be protected. So whether you are advising your clients, building a startup, or shaping a policy, you have to always ask, what exactly are we protecting, and how well are we protecting it? Thank you very much.
Thank you very much, Mr. Abidamola, for your presentation and your discussing class. We sincerely did enjoy everything that you had to share. Thank you to both mentors who have gone through who have gone through the discussion today. I'm sure after we are done with the mentees presentation, we'll be reverting back to you to get your thoughts on the presentation while we take questions and then answers. Questions and then we'll call it a day. So please over to the mentees. Can we take your presentation, group one, if you're with us, presenter? Let's get your presentation on the way. Presenter for group one, are you with us? If the presenter for group one is not with us, can we have group two's presentation? Then we'll revert back to group one while they get themselves ready. Mentees, are we with us? Please let's please who are our presenters? Who are our presenters? Can we hear me, mentees? If the main presenters and the backup presenters are not available, can we have stand-ins, people to fill in for the presenter and the backup? Please let's respond. Taslima, are you trying to say something? Okay. Professor Chuku, please you can go ahead. If you need assistance with me sharing your slides, you can let me know. Gold, can you hear me? Oh, okay, please go ahead. Please, what's the challenge? Are you having any issues? Just kindly let me know.
Dennis, I noticed someone is raising a hand. Perhaps the mentees are not permitted to unmute.
Okay, she said she sent a message to the chat box that she wants to share her screen. Oh, you can't unmute.
She can't unmute yet.
Let me see if it's something we can. Okay, I think it's a problem with your device. Maybe you can check your audio. If you are joining in with a system, there is a drop down, or is it a drop up bar that you can use to check your audio.
I think the host can also try unmuting her so that if she doesn't have the permission to unmute, that will automatically be permission to, that'll be approval for her to unmute. So I think host can try unmuting and see what it says.
There is no option to unmute. It's just asked to unmute. So it's not working. Please, what device are you using? Maybe we can find a way to work around it. Oh, it's a mobile phone. So maybe you can go to your phone settings to permit you to use your audio in this session. Try and see if that is going to be possible. And which group are you presenting for so that I would be aware?
Okay, hello. Um,
Oh, yes, we can hear you now.
Let me share the image document.
All right. Please go ahead and share your screen.
Okay.
If you need assistance sharing your screen, just let me know.
Okay, yes, I do. I'm trying to share it and it's saying unsupported. So I don't know.
Okay, give me a minute to bring up your slide.
Okay.
All right, please confirm that you can see my screen and this is your presentation.
Okay. I can see your screen. Yeah, it's our presentation.
Please go ahead. Just let me know when you want to change your slides.
Okay, no problem. Hello, everyone. Sorry for the delay. My name is Onukudeko Sochukwu. I'm the presenter for Group 2 and we'll be teaching on navigating the intellectual property landscape in FinTech. So IP protection is critical in FinTech because the entire industry is built on ideas, algorithms, and trust. So it's very important that we know how we navigate the intellectual property landscape in FinTech. I don't know if you can move to the next one. I want to see the next slide, so I'll be sure that it's corresponding to with the slide we have. Okay, thank you. So the first is an overview. That's why should IP be protected, especially in the aspect of FinTech. As I already explained, IP deals with intellectual property, that is licensing patents of one's property, as most of the mentors have already earlier mentioned. And FinTech is more like basically digitally, like it's not something you can hold, it's not tangible but intangible. And so there is a need to actually protect properties, intellectual properties which we have. And why do we need to protect these intellectual properties? Is to avoid copycats from taking our information, or persons or competitors from taking our information and using it for their benefits. And then FinTech firms compete primarily because it's mostly on intangible assets, which are softwares, algorithm, codes, data models, user interface, user experience, trust signals, regulatory execution, unlike the traditional industries. So when you make like a blockchain invention with relating to blockchain, it's very important that you protect that code, you protect that blockchain. So another person or a competing person would not go ahead and have right over that property. So that's also another importance of it. Again, is unlike traditional industries, FinTech value is scalable and replicable, making IP protection unusually critical. So WIPO frames IP as a business asset that delivers competitive advantage, revenue stream, financing access, and risk reduction. So the essence, why do we need to protect IP in under FinTech is number one, as I said earlier, to prevent idea thefts and prevent copycats, like because FinTech idea can spread fast, especially with respect to payment apps, crypto platforms, lending systems. If you don't protect the coding for those ideas, another person can take that idea and then, gain right over that idea in the aspect of patents, and then it would now be seen as their own. And then an example could be like now Flutterwaves, as earlier mentioned, operates in a highly competitive space where similar services can easily be duplicated. That means if you don't control the ideas, the FinTech ideas you've created, there's a possibility and likelihood for another person who has similar ideas or that have seen your ideas would want to take over those ideas. So what IP does is that it gives you legal ownership and control over your ideas. Another one is that it attracts investors. You can't just decide that you created an idea and then you don't want to make sure the idea is in your name or in your control. Because when you're going to be talking to the investors, you're not going to be telling them about this is my idea. You're going to be giving them a reason to believe that the idea is actually from you and not stolen. So investors will not just fund ideas, they fund protected ideas because nobody wants to make loss in the process of funding. So that's another thing. Another thing that the reason why we need to protect our IP especially in the aspect of FinTech, is because of legal competition and, as I said, competitive advantage. Another one is you can protect sensitive systems, like in aspect of money, identity, and transactions. If, for example, OPay, if the ideas are not protected, especially the fintech ideas are not protected and well guided, you will see it will be easier for people to access OPay. For example, in OPay, we have things like verification of face, facial verification. We have things like fingerprinting and the rest of that. Those are some of the ideas they put in place to guide and protect processes. So if, for example, if they don't protect those ideas, it can just come up and take control over that idea, and then it will now be easy for the likes of hackers and online, and it will be easy for theft. Yeah, it will be easy for hackers to hack through the system because it's open for the world. So that's another sensitive reason why we protect it, because we want to protect sensitive systems of the IP. Another one is to build trust with users. For example, one thing OP has helped us to do is we can trust that there are certain things that cannot get missing. There's this OPay way of making sure that even if your phone is stolen, your items or your apps are stolen, your phone, your gadgets are stolen, they can still be able to monitor your money. You can instantly block the account so that the thief cannot have access over it. It gives me a user the trust to know, okay, fine, I can actually rely on this platform. It's not a scam. And then it also gives me a reason to believe, okay, this is not just some idea that comes and that can die off as soon as possible. So it also helps me to know how to differentiate the fake apps from the original apps, because even if someone was to replicate OPay, it would not be possible because of OPay already has control through patents and through other means. So, and it will be obvious. That's another thing. And then again, another reason we need to protect our IP is also for innovations, for your innovations to be in your control. That's also another reason. So then risk reduction, financing access, revenue stream, and competitive advantage. Don't know if I can get the next one. Hello? Okay. The right IP mix for fintech. The right IP mix for fintech. We have core technologies, which I said would include patents, and trade secrets. So this is literally telling you how you can. The right IP mix is really just patents. Assets require different protection strategies. So the right IP. Hello, can you hear me? Hello?
Yes, we can hear you.
Okay. So the right IP mix for fintech is all about combining different types of intellectual properties in a way that can protect your innovation, which we have the likes of patents, we have the likes of trademarks, and it also builds trust and supports business growth, because fintech products are usually digital, as I already earlier stated. They're usually digital. So it's very important that we rely on certain ways of protecting our ideas and our intellectual property, which include patents, trade secret, trademark, copyrights, and trade secret controls. Now, in respect to patents, mostly it's used for when it with regards to any creative ideas that come out of a blockchain innovation, out of maybe if you're trying to protect your ideas with respect to, let's say, for example, if you have an idea for a certain type of cryptocurrency, you can as well create it through patents. Or when it's with regards to transactions, maybe you have a different idea that most banks don't yet have with respect to transactions, you can as well protect them. And then why do we protect? We protect them, as I earlier said, because of we use patents, sorry, because of it gives stronger legal protection, because it gives you rights to enforce that, okay, you have right over this. For example, if someone infringes on your rights or infringe on your rights and takes over, let's say, for example, you created an app with respect to cryptocurrency, or you created a website, or you created an idea with respect to cryptocurrency, whereby you can transfer cryptocurrency immediately to other currencies, and then you gave it a name, and then someone goes ahead to copy that same idea, which you have already you've already established it as your own true patent, and then someone goes ahead to go and create that same similar idea, with the same structure, with the same coding. You can as well sue the person in court, because you already use true patent. You have stronger legal right over that particular idea. So another one is trade secrets. In order for it to protect trade secrets, for example, Coca-Cola, no matter how good Pepsi would be, no matter how good Big Cola can be, it's not the same trade secret. It's not the same secret of how they make or produce Coca-Cola that they do with Pepsi, that they do with other aspects of soft drinks. That same way, with respect to protection of your trade secrets, it's not the same way it is OPay is structured, it's the same way MoneyPoint is structured, or the same way PalmPay is structured. They are structured differently because there are certain ideas that are already in control because of trade secrets. And then we have the likes of trademarks, to protect your company's name and your logo, your brand identity. Like now, for example, let me give an instance, Zenith Bank, no bank can decide to use that Z sign in Zenith Bank and produce its own bank, or use that logo for another thing, because already we know that logo represents Zenith Bank. Same thing with First Bank. You can't go to as a bank, create your own create your own company's name or business name using First Bank, because it already has its name trademark, right? So no matter what, same thing with Coca-Cola, no matter what, you can't use Coca-Cola, you can't use Coca-Cola in a bottle, to produce another soft drink, or even to use the name, because the name already has been trademarked to represent Coca-Cola company. Then, and then copyright. Copyright is used for sourcing code, UI or UX design, and then documentation. And then what it protects is the expression of your ideas, and then it prevents any direct copying. So that's what copyright does, and there's a right for that protects this. For example, if I have a novel writing, I write novels, and it's more like novels that are basically online. For example, just giving an instance, they're basically online, and then I want to protect it is through copyright. I would detail that this should not be copied for any reason, the idea or the structure of it. Same way, if, for example, I'm using the TikTok, and then I created an idea, and I don't want any other content creator on TikTok to use that particular idea. TikTok has in its settings where it gives you right to actually say, okay, you can't use this sound, you can't use this particular idea that I have, because I have a copyright over it. Another thing is, okay, I think that's it. Yeah. Can I get the next one? Okay. The next one is proactive IP portfolio management. Sorry, can't seem to see it well. So what this means is the essence of protecting your IP under fintech. Sorry, the essence of protecting your IP under fintech is to protect it before the event of before something happens to it. That is, for example, you don't protect your ideas after the person has right over the ideas. After the person used the ideas, you protect it to prevent the person from using it in the first place. That is why certain times it's hard to hack into certain systems, especially bank systems, certain bank systems, because there are other systems in bank that are more proactive than reactive. That's when the mentor explained that proactive means whereby you're protecting the idea before an attack comes. You've already envisaged the attacks. You already know that this is where the hackers will attack. You already know that this is where they will go towards, this is where they will touch your invention, and you've decided to protect it before any attack occurs. So in the aspect of IP in fintech, it is acknowledgeable and important that it is protected proactively than reactively. That is to say, that proactive management in fintech means treating your intellectual property as a living strategic asset. That's by identifying, protecting, reviewing, and leveraging on it to stay ahead in a fast-moving industry. You're trying to protect it. So because one thing about fintech, especially the online sector, is that it's easier for someone to gain access to certain informations or ideas or codings that you may have. For example, if you are protecting your coding, even if, for example, if you're protecting your IP ideas, for example, your IP ideas, for example, and someone, maybe your phone was stolen, your laptop was stolen, because that idea has been protected, it would not be easy for that hacker, the person that has access to your phone, to access those things because they've been protected. And I also feel that's the same way with respect to protecting of proactive protection of your IP portfolio, in the sense that it is not limited by a particular gadget, and it's in a way that it is stored more in the cloud. For example, if it is stored more in the cloud, if, for example, I'm into cryptocurrency, for example, and then I lost, or so my laptop got stolen. If, for example, I've saved most of these crypto transactions online or through the cloud, through the iPhone, I can easily access it back and get back my informations, my ideas, because I've already proactively found a way of protecting my ideas, protecting my transactions. That's the way you're expected to have a proactive IP portfolio management. Now, two is customer-facing brand assets, regulatory compliance assets, data assets, collaboration assets, prioritization filters, commercial value, ability to exclude competitors or generate future economic benefit, and possibility whether rights can be practically be defended. Disclosure costs, risks of revealing know-how prematurely. That's the reason for this proactive protection is for you to protect it from the risk of you exposing certain information about that idea, which would be easy for whoever that wants to copy the idea to copy it. So, yeah, can I get the next slide? So the next slide is tailored IP strategy aligned with business goals. So 4 strategic postures map the fintech business, which includes payment or neo banking. Okay, I gave an instance of OPay with respect to OPay. There's a certain strategic way they used to prevent hackers from attacking their users, especially getting information about the users, which is actually more active than other physical banks. So we do that to minimize risk with respect to we do that. Sorry, we do that to minimize risks with respect to payments and new banking. For example, as I said, it would be hard for them to gain rights. It would be hard for them to gain rights over OPay. I'm giving an instance with OPay because there's a certain strategic way they've used to protect and minimize risks of their risks of copying of their information of their IP address. Same thing with protecting the payment procedures for the users. For example, if you go to certain, if for example you are to put certain number, maybe someone gave you a number and then you wanted to transfer money to that number, and sometimes OPay will say this number has a risk factor of being is it illegal, being through illegal means or stuff like that, or they'll alert you, they'll give they'll make you know, okay, this place, this is not actually, it's not actually safe for you to transfer the money into the account. So tailored IP strategies align with business goals, which helps to design your intellectual property approach so that you can support what your fintech company wants you to achieve. And then whether it is rapid or in aspect of attracting investors, as I earlier stated, the investors will not like, sorry, to invest in a product that is known to everybody, that everyone has access to, like a product that everyone has access to its idea. That the idea has not been given authority. It's not owned or controlled by you fully. And IP is not just like about legal protection; it's a business too. So instead of using a one-size-fits-all approach, fintech companies align with IP. Remember, IP is the law that guides every form of protection of your intellectual property with respect to whether write-ups or trademark, name, company name, and the rest of that. So IP aims, it's aligned, IP's aim, is to align to grow strategy, revenue model, and competitive positioning to bring you in a better positioning with your competitors, whereby you have like a better idea of certain things and they can't like take those ideas from you. So we have companies like Strips and Flusterwaves, which succeed partly because of their IP strategy, which they match with their business goal. So it's not only about having just business goals, you must have IP strategies that match with it. That means there should be an alignment between the two. Again, it's aligning IP with key fintech business goal. The focus is on speed and then user adoption. It should be strong, should have strong trademark, it should have copyright for software, it should have minimal patent initially. Like for example, as I said, OPay scaled quickly by prioritizing adoption of heavy patenting. That's where I explained that they have rights over certain, if you go to the apps, they have right over certain things that they give to you. Another one is it reduces costs. So one of the things IP does is that reduce costs apart from minimizing risks. That is the B2B infrastructure, patents, trademarks, and licensing. Then extra value, open banking and ecosystem. It also makes like a wide scale of users to have wider view of what you are or what your app is all about. No user would love to invest in an app that is not fully protected. They will want to invest in an app that is protected, that is kept safe, and an app they can rely on. Then it creates strategic value, AI-driven credit and analysis, trade secret control, and data governance in the sense that it protects your ideas in such a way that it cannot be easily gotten from whether through AI means or whatsoever. I said something about ecosystem expansion, adoption and network growth. IP strategy is to explore selective patents, then open source elements, strong trademarks.
Hello, good.
and
Sorry,
also
sorry
for
for
wider,
interrupting.
sorry.
Yes, sorry for interrupting. Please, I would like to kindly request that you speed up your presentation.
Okay, so sorry. So sorry. So next, sorry. Can I get the next? Okay, defensive publication licensing and cross licensing. Defensive publication is all about disclosing an invention publicly praised per art. That means you're disclosing that the invention belongs to you and is useful for peripheral workflow ideas, interface layout, non-core automation methods, and then it avoids for core security settlement logic or fraud technique. Then we have licensing and cross licensing. Licensing is not that you own the property or you own the idea, but you've been given right over certain aspects of the idea, depending on how long they give you the right over that idea. A licensing, you can be given right over that intangible asset with respect to like a year, for 2 years, 3 years. As one of the mentors had earlier stated, that the company producing Coca-Cola in Nigeria is not per se Coca-Cola itself in America because their tastes differ, but it's more like a company that has been given licensing rights to produce Coca-Cola in Nigeria. So that's what licensing is all about. Then we have cross licensing in the aspect of, for example, if I have an idea and the next person has an idea, and that next person, maybe the idea is on online banking and my idea is on cryptocurrency, and then I give this person right over my idea for certain years, and this person gives me right over their idea, and then we are working like more like in collaboration in the aspect that, for example, we are like an online payment platform whereby you can pay through cryptocurrency, which is my idea, and then you can also pay through online means, which is naira, dollars, and other international currencies. So it's cross licensing whereby you both, or there is an exchange of ideas, right of certain ideas for certain time. No. Next, please. Okay. So collaborative IP protection, FinTech is highly network, payment, rail, identity system, lending APIs, and open banking infrastructures depending on the interoperability. Consortium-based protection. So what it's trying to say is that tech aims at reducing any form of leakage, risk access. Sorry. FinTech aims at preventing any form of leakage risks, blur ownership boundaries, platform IP disputes. If agreements are not precise, then weaken trademarks secrecy unless contractual controls are robust. Okay, next one. Okay, emerging technologies. So these are technologies that obviously is very important that are under IP control. And number one we have is the AI IP assets, like the AI models, training pipelines, prompts, and inference workflow can be valuable ideas assets. Sorry, protection typically violates secrets of patents. So for with respect to AI/IP assets, it's protected towards trade secrets and patents. Again, it's AI risks and compliance. AI increases infringement risks through reliance on potentially copyright training data. EU AI Act transparency obligation creates tension with trade secret protection. So we are talking about technologies and how they can be a form of risk factor for IP ideas. Yeah, blockchain protection to support governance tracking, time stamping, ownership records, and royal tracking. priority tracking, useful as an evidence and auditability layer. And we have blockchain limitation. Blockchain does not replace legal rights, it supplements enforcement, and then can function as both a product opportunity and an enforcement support too. So the essence of this is to say that because of the emerging technology, there is need for IP control. Because, for example, there are certain apps, AI apps, that can be used to replicate certain other apps. You know, the apps, you can just type in certain information that you want. So if your information or your ideas are not well protected and then they are brought online, it's easy for people to access or gain access to it. So the essence of having IP is to protect all this AI, these blockchains from being in the hands of the wrong person. Sorry, the next part. So we have regulatory frameworks and international cooperation. So we have corporations that guide this IP, especially internationally, this IP rights. We have the GDPR, which personal data rights affects IP protected data set models and personalization engines. Then we have JIRA, ICT risk management is now essential. Operational failure undermines IP value. These are like regulatory bodies that protect with respect to GDPR. There are EU AI Act, which protect trade secrets and then ensure compliance. Then we have the PCT, which ensures patent cooperation. Trinity is like a Trinity. Then we have Madrid, which is an international trademark registration, whereby you register your trademark so that nobody, or there will be no access to it from anyone. Sorry, no one can claim right over your logo, which you have already created. Then we have the ARGU, which is for industrial design protection across participating jurisdictions. So it only applies mostly to jurisdictions that participate in it. Thank you. So in conclusion, the strongest fintech IP strategies are selective, layered, and business-led. So the first goal is to map the IP portfolio, identify revenue and bargaining drivers, then file patents where exclusively matters. Where exclusivity matters, keep the know-how secret, to keep those secrets hidden and not to expose it, that I explained. No matter how you make a soft drink, it can never be the same as Pepsi and it can never be the same as Coca-Cola. Then next is to publish defensively to block competitors, license or cross-licensing where ecosystem control matters. Then integrate compliance, cybersecurity, and data governance. So AI, blockchain, and data regulation are turning IP management into a governance discipline. That is in the aspect of it's giving government also right to control certain aspects of this AI, of this blockchain and other ideas, so as to ensure that the owners of those ideas, their rights are not infringed. Thank you.
All right, thank you very much, Gold, for your presentation. Well done to you and to your team members that put it up together. We'll not be wasting any other time. We'll be getting straight back to our mentors. Sorry about any noise in my background. To just get feedback on the presentation, And then after we are done with the mentors' feedbacks, we'll take questions and then we'll call it a day. So Mr. Max, do you have any feedback for the mentees?
Okay, thank you, Dennis. Wow, permit me to commend the mentees. I mean, that presentation was really well put together. Gold, well done. You guys, I love the fact that you made it as practical as possible. I particularly enjoy the part where you try to match, the necessary IP to the different operations and functions of a fintech. That just brings an important point that IP is a whole enterprise type effort. It's not isolated because you can have one product or service or just a few products or services, but that few product services would involve a multi-dimensional IP strategy to ensure you are getting maximum protection and of course also at a cost-effective, within a cost-effective strategy. So it's very important that IP is actually a management issue. So the mistake most people make is that IP is classed just as a legal issue and usually left to the legal department, but that's not really the way IP should be treated in an enterprise. IP should be treated as just the way the management doesn't leave the marketing plan to the marketing department to do. So also the IP strategy should not be left just to the legal department. IP has to be driven, by way of a proper management, a proper strategy from the management level and then all the way down into the organization. The one point which I think you touched on a little bit, which I'll just highlight, is that importantly also IP is also a part of the risk management system for an enterprise, because beyond just being a sword or a sword or a shield that you can use to make revenue and protect your new inventions and all of that, there's also a risk element involved in IP, that in as much as you are preventing others from stealing your IP, you should also be careful that you are also not infringing on the IP of other people. And one area where this is an issue is what we call open source licensing. So of course, I'm sure a few of us already know or will have heard about open source software, which essentially is a software that is created but is now shared under a copyright license that imposes certain obligations. Because as we already established, software, I mean, and I think Mr. Adedayo made that point in his presentation as well, that software, typically the codes and all is protected by copyright. So, but what happened was with the open source movement was that a couple of people came together and realized that if every innovator in the technology space decides to ring fence their innovation using copyright law, then we might have a situation where we are not having incremental build-up of knowledge. So based on that, the philosophy behind the open source community, their advocacy was they need to allow incremental build-up of innovation, that ultimately the entire ecosystem will benefit more from that collaborative approach than everybody operating in silos and everybody just trying to, ring fence and hide their own innovation under their copyright law. So there are different kinds of open source software license, but the broad principle about them is simply this, that the creator of the software is saying, I'm going to put my copyright or my source code with the attached copyright in the public domain. Anyone else is allowed to use it and build upon it, which normally without that open source license would be an IP infringement, because you cannot pick somebody's software and simply re-engineer it or improve it or work on it without their permission. But under an open source license, the owner is saying you can do that. But the only condition is that just the way I allowed you to use it, if you also use and you improve it, then you must also make it available on the same condition to other innovators to also build up on it as well. So you can see that it's kind of a chain. So the danger with open source license, and which is one of the good things about the presentation, is that when you map your product, you need to know, of course, the parts of the product that are your core commercial advantage. So you do not want, for instance, to lose that. There are parts of your product which can benefit from open source and which you're also willing to open up for others to use. But what you want to avoid is your key proprietary software. You do not want it to fall into the public domain under an open source license. So it therefore means that when you are developing your software, you have to have what we call, a procedure, a protocol called clean room protocol, where you make sure that there's a clear separation between the development of core proprietary software and then maybe the ancillary software around it that are gotten from open source software. So you make sure the two do not mix so that you are not using anything from open source as part of the creation of your core proprietary software. Otherwise, your core proprietary software would also fall into the public domain, to the extent of it will now be open for other open source developers to also use it. So these are some of the little areas that fintechs need to be savvy, and that is why I say it's also a risk management issue that the fintech needs to also understand that beyond the legal function, the risk management function in the organization also needs to continually look at the software. If you are using any open source software, then ensure that you do not contaminate your core proprietary software with any of those open source software. Otherwise, your core proprietary software falls into the public domain. And then, of course, like I said, also, beyond that, also, you need to be careful. You must vet any technologies you are using from vendors, from third parties, to ensure that in using those technologies, you are also not you do not end up infringing on intellectual property that belongs to third parties, and then open yourself up to infringement. So I'll end with giving a live case scenario. I'm sure most of us on the call we should know BlackBerry, but BlackBerry, for those who may not be too familiar with it, was the first harbinger really of mobile technology as we know it now. So, for instance, in 2008, when President Barack Obama won the US presidential election, one of the core things you could attribute his victory to was actually the use of BlackBerry. BlackBerry was, for instance, the first mobile device that you could chat real time with people the way, of course, we do it easy now with WhatsApp and all the others. But this was not common in those days. You need to understand that then it was text messages, you have to write emails and all, but real-time chatting, setting up group chats and all of that, the way we do it easy with WhatsApp, Telegram and all of that now, was not a common thing then. So BlackBerry was actually one of the first people who pioneered that kind of technology. So they really made it possible for mass communication in a way that was not known before then. They had a very innovative technology behind them, but they made a terrible mistake. One of the core functions of their technology, which was actually the ability to enable multimodal chatting, essentially creating groups and all of that, which was one of the key technologies that underpin their offering, their service, had been registered by some other small company in Canada as a patent. When they started off, of course, the smart thing to have done was to approach those guys and buy off. Typically, before you become too big, those guys would sell maybe for cheaper. But of course, the bigger you become, the more expensive you become. Somehow they ended up not doing that, and they kept dragging their foot. And as they kept becoming bigger and bigger, the guys saw it as a big opportunity and refused to sell, and were driving a hard bargain to sell at a much higher price. So when the negotiation started, at some point, the guys were willing to sell for about $8 million. It moved up to about $40 million. But when a deal could not be struck, those guys filed a patent infringement suit against the BlackBerry company. And ultimately, after a lot of back and forth, that suit was settled for I think somewhere around the regions of I think $400 million. So that, amongst many others, were part of the factors that led to the demise of BlackBerry as a company. So just because they did not properly understand the risk management angle of intellectual property, they ended up losing that case, and of course ended up losing, to a large extent, their company at the end of the day. So this just shows that, we should also understand that IP is also a risk factor beyond just being something that is an asset and all of that. It's also a risk factor. So in as much as you pay attention to protecting your own IP, you must pay attention to ensuring that you are not infringing on IP of others. And if you are, part of the presentation made it clear there are many ways you can resolve that. You can get a license from the third party. You can get into collaborations. You can even buy over that third party as well, just to ensure that you continue to have what we call a freedom to operate so far as IP is concerned. So I just thought to add that, but then I must still commend the group for a wonderful presentation. Thank you.
All right, thank you very much, Mr. Max, for your feedback. It was really, really well thought, and I hope the mentees received it well. Mr. Adedamola, do you have any feedback for the presentation that was made, sir? Hello, Mr. Adedamola, are you with us, sir?
Yeah, what I would like to say is that it's a very brilliant presentation by the presenter, and obviously they have done their homework and research. And what I would say is that to be very vast and to be very vast and to exceedingly in that field, you have to keep on broadening your knowledge. You have to keep on developing yourself in that space, so what I would say is that I'm impressed with the presentation, and it is well put together. And with the addition that I made, it is a very brilliant one. Thank you.
All right, thank you so much, Mr. Adedamola. So we'll be going straight to take questions. If you have any questions for our mentor, please do well to indicate for raise of hand, so that we can take your question. Any questions from the mentees? Okay, while we wait for questions, I think I have a question, and overall, I just wanted to know, Mr. Max, for instance, I just want to drop a scenario, and I want to get your thoughts on it. So, for instance, I have an idea, a fintech idea, and I have not yet put it down on paper, but maybe I've put it down on paper, and I have written down some of my plans, and even started developing the codes for some of my softwares and the rest. But I need funds and I need capital to go and make it. So I reach out to investors, and in pitching my ideas, the investors, I end up not getting the money that I need, but I find out that my ideas have been capitalized on by maybe the investors, and they maybe rebranded it in their own way and put it out in the market, even though I am the originator of the idea. What would you suggest for someone who is trying to, against this kind of scenario where maybe in the sense where he's trying to get money to build his idea, the partners he wants to fund the idea do not take advantage and sideline him while they do their build up on his own idea, because obviously he has not yet the idea itself has not materialized into the product yet to protect.
Okay, thank you, Dennis. In fact, this question you have asked is a very practical question. I can bet you that as we are here talking and before the end of today, this scenario is playing out somewhere in Nigeria. Somebody is going to meet the uncle, somebody is trying to meet a big banker that they know to pitch an idea, and hoping to get funding to allow them maybe develop an MVP, minimum viable product or to even develop a prototype and all that. It happens all the time. It's one area that I've also had quite some experience from the very bitter, and over time, at least I've learned from I've learned from that experience. So there's something Mr. Adedamola said when he was presenting, which I think is very golden, and I urge all the mentees to remember. Now, intellectual property law is not out to help you monopolize ideas. Intellectual property law, as a matter of public policy, is out to drive innovation for the betterment of society. So let me explain what that means. That is why in certain areas, for instance, in patent law, the government gives you a 20-year monopoly. Nobody else can use that invention. But in return for giving you that monopoly, you must disclose the full workings of your invention in your patent application document. The idea being that what is sufficient disclosure is such that after your 20 years monopoly is over, anybody who goes to the patent office picking up that document should be able to work that invention just by the disclosure you have provided there alone. So you can see that the enduring public policy there is to ensure that you have worked hard, you put in a lot into research and development to come up with that invention. The government says, fine, let's give you a 20-year monopoly so that you can make a return on the investment to encourage you and encourage others to also innovate. But after that 20 years, we want that invention to become available to the public for the betterment of society. So that's kind of one of the public policy thinkings behind intellectual property law. So therefore, and Mr. Adedamola also pointed out, when it comes to a patent, for it to be granted a patent, of course, you must show that it is novel. That means it is new. You must also show that it has industrial application. That means it's something that is, that has a real world benefit in an industry. So because of that, the law will not protect you if all you have is still an idea. You must have sweated out that idea. If it's a copyright, you must have expressed it. If it's a novel, you have written it. If it's a song, you have composed it. If it's an audiovisual work, you have recorded it. You must have done something to give flesh to that idea. It is only when you have given flesh to the idea that is when the law protects it. So, and then we come now to your specific question, Dennis, because this happens all the time. Somebody has a good idea, he doesn't have the money to fund it. Maybe he has done some preliminary research, he has already done some product development to a point, but then now wants money or wants to get a strategic partner to help them through. And then they quickly rush, do a slide deck, and then go to present to the people. So I'll give you one of my first experience in this area. Much earlier in the day, when the CBN issued the first sets of mobile money licenses, I had a client who came up with a unique, now QR code payment is standard, but I'm talking about 2016, 2015, 2016. He came up with a unique way to enable QR code payment. The thinking was, particularly for him, this problem I was trying to solve was the issue of change. People go to buy stuff in a shop and then there's no change and all. And I thought about it. What if we have a simple way, that a person scans the other person's device, essentially a QR code, and then payment happens effortlessly. Of course, because like I mentioned in most fintechs, he didn't have the money to get a mobile money license, even though mobile money licenses then were not too expensive. But still for a startup, it would have been a lot of money to fulfill all those CBN requirements, incorporate a company. The company must have a share capital. I think at the time, minimum share capital for mobile money license was, I think, 100 million naira and all of that, and a couple of other very serious requirements. So the option then was to partner with somebody who already had a money lender's license and see how we could develop a joint business with them. So he reached out to, before he even got me involved, he had already reached out, he had gone very far discussing with those guys. He had even, shown them things, send them emails, send them things on WhatsApp, and really largely revealed everything that was the unique proposition of his business, just thinking out of excitement and all of that. So by the time he got me involved and we now went formally to do a presentation, and surprisingly after the presentation, the guy sent an email back saying, well, we have seen your presentation, it is quite good, but we want to let you know that before you came to present to us, someone else had already, in our team, had already generated the same idea. We're already working on it. So of course, you know where that would end up. So because of that, I had another experience where also it was also a startup trying to pitch something to a bank. This was maybe just before COVID. This would have been like 2019. And same thing, we were supposed to do the pitch to the bank. And because I had learned from my president, I told him, no, before we go to do this pitch to the bank, let's let the bank know we want them to sign a non-disclosure agreement with us. Of course, guess what would happen? I mean, the bank looks at you. Who are these small players coming out signing an NDA with us? And the bank refused that they're not signing an NDA. That if we are not willing to come and make the presentation, then we could as well go with our solution, but they won't sign an NDA. So what I've learned from all those things over time is that typically a startup, like the example you gave, Dennis, you don't have the money, you don't have any leverage. It's difficult to even get the big player to sign because, of course, a few big players are also afraid that this person will come pitch an idea to us now. It might be an idea we're already working on, and then after a while, he's going to start, taking us to court, troubling us and saying we stole his idea and all that. So sometimes they also do not want to sign. I just want to keep you at bay or want you to come and present on condition that they, on conditions that they have no obligations to do anything with your presentation. So the middle ground I have found, which is what I use with clients from till now, is this. Since most will not agree to sign an NDA, at least a simple email confirming, look, we as discussed, we are coming to your bank on so and so day to make a presentation of our XYZ technology, a little synopsis of what it's all about. We look forward to meeting your team and engaging more. You do that. Of course, the presentation slides and the documents you present, you also make sure you write clearly. These are confidential documents that contain proprietary information of the business. So all of that would give you some measure of protection under what we call trade secret law. And I think Mr. Adidamla mentioned it also, the presentation touched on it a little bit. So it's still a tough area, but fintechs and startups must become a little bit more savvy about protecting themselves. You do not immediately rush to begin to seek partners the moment you have a good idea. Allied to that is that you need to also understand that while copyright automatically arises the moment you have created a work that is eligible for copyright, you don't need to do any registration before you are protected. You need to know that that is not the same for other types of intellectual property. For instance, patents. If you have an invention and you do not register it and you go ahead to disclose it to the public, you lose the right to register it forever. That invention falls into the public domain. Anybody can use it without permission and without incurring liability of infringing on your patent right. So it therefore means that for patents, you must register before you put that invention into the market. So the ways to protect yourself if you are going to make a presentation, like I said, is ensure there's a non-disclosure obligation to make it clear that you have not disclosed that invention to the market. You have only communicated it confidentially to a third party. That way, your right to register it later is still protected. Under the patent law in Nigeria, for instance, there's also an exemption that where you demonstrate your invention in a public in a research, there's actually for the exact word now, in like a conference, an academic conference, and those kinds of places, you still will not lose your right if you still go ahead to register within, I believe, 6 months. So these are some of the exceptions that are there. So it just means when you are going to disclose your invention or your IP to third parties seeking funding and all, ensure that you put as much protection as you can. Otherwise, you might end up losing your IP to those third parties without any obligation on their part. And like I said, we have a lot of cases where these things have happened, with banks and with others, and people have even gone to court and were not able to prove that they actually made the presentation to the third party. That's why I say the simple email and other documents to just show a thread of discussions would also be very helpful. Thank you, Dennis, for that very practical question.
Okay, thank you so much, Mr. Marks, for your feedback on that question. I sincerely do appreciate it. It's well noted and well understood. So please, do we still have any other question? I think we can still make room for one question. Any questions from the mentees? Okay, good. Please, you can go ahead and ask your question.
So I wanted to ask with respect to protecting my rights. Do I go ahead, for example, if I want to create a fintech app, do I go ahead to protect the coding or to protect the name, or to protect the idea first? Which one comes first with respect to protecting of my fintech ideas?
Okay, thank you, Gold. I think I would want Mr. Adidamola to jump in and see if he can help answer those questions, sir. Mr. Adidamola, are you with us, sir?
Yeah, sorry, can you hear me now?
Yes, sir, we can hear you now, sir.
All right. You know, when I was speaking earlier, I said when it comes to intellectual property protection, for instance, you are asking which comes first. Yes, you can easily protect your name, your logo, and your slogan. But if the idea has not been expressed, if it is still an idea, you cannot copyright it. I don't know, maybe that answer your question.
Yes, sir.
Uh,
All right, so thank you very much, sir. Thank you so much, Mr. Adidamola and Mr. Max, for helping us run through questions, and also for the presentation and the discourse in class on the intellectual property protection of fintech. And thank you, Good, for your presentation also on behalf of your team. Just before we go, we usually take pictures. So please, mentees, let's kindly turn on our videos for our quick picture time. Right. This is, if I'm not mistaken, the official last class in the data in the sorry, let's say data in the fintech class. So please let's turn on our videos. Let's quickly take our pictures. Thank you, Gold. Do we still have mentees that can turn on their videos? Let's kindly do that for a quick picture time.
sorry, do we have to turn our own camera on or just the mentees alone?
No. Okay, thank you, Teslima. Thank you, Victor. I can see we still have a few people, so I'll just kind of give it a minute. All right, thank you also, Mr. Max. So, okay, I see. Okay, one more person has turned on their video, so let me see, pick another one. All right. Yeah, so we are done with that. Thank you, everyone. A big thank you for turning up in class. Well, kindly do well to share what you have learned in the session. You can reach out to our mentors after the class. Their profiles, if you want access to their names, you can just reach out to me. With their permission, we can send you maybe their emails. If you do want to ask further questions outside of class, and if you want to connect with them on LinkedIn, you can search them out and you can connect with them. Please fill out your attendance. Make sure to fill out your attendance and watch out for further announcements that will be coming up in your group as regards the dynamics around class next week. With that, we've come to the end of today's session. Thank you, everyone, for joining in and for being here. We really sincerely do appreciate all of our presence. Goodbye, everyone, and enjoy the rest of your weekend.